What's up, you guys? It's Keith here. Today is December 9th, 2021, and in this video we'll be doing both a crypto market update, looking at the crypto market, not just like Bitcoin, but we'll look at Dominance, we'll look at some other charts that are pretty interesting to check out, gives you a little bit more perspective of what's happening in the world of crypto. We'll then switch gears and look at the more broader market, look at the traditional markets. This would be things like the S&P, NASDAQ, VIX. We'll look at bond values, we'll look at bond yields, and we'll take a quick look at the currency market as well, mainly looking at the DXY, the US dollar index, but we'll also take a look at some major pairs within the FX markets as well. So thank you very much for tuning in. We're going to jump right into it here. I do have a little bit of a different structure in terms of how I'm laying out TradingView. I'm utilizing the favorites list a lot more, or the watch list, whatever you call it. And I have 4 different time frames of the single ticker or the single chart. You got the weekly chart, which is on the bottom right hand side. You got the 2-day, which is on the bottom left hand side. The 12-hour is on the top right, and then you got the 6-hour, which is on the top left. So it gives you a really good overview of the large time frames, which is on the bottom, and then the smaller time frames, which is on the top. And then if you really want to get to the nitty gritty, you would look on the very top right hand or top left hand side there. But overall, we are trying to stick to a larger time frame, and it looks like Bitcoin is testing its support at around 47K. So when you're looking at the larger time frames, we are seeing a nice consolidation here. So the 2-day, I think, is a really good representation of what's currently happening. We are just still forming a nice consolidation. The major zone that I'm looking at for a potential level of support is going to be around that 50K zone. If we look at like a large time frame, like if we zoom back out and go to, let's say, the weekly chart, you do see a very solid candle closure right at that, let's say, just below 50K level. And we still have 3 days on this upcoming weekly candle. It would be fantastic if we are able to see a recovery back up to the 50K. So we're seeing a big candle to the downside on the first week when we had that sell-off. And if we are able to recover from this current sell-off back up to that 50K zone, that would be looking phenomenal, because then we'd be holding this key level of previous resistance. And if we take a look back, we can see it was a key level of support, and we saw a couple candle closures and a couple supports at around that 50K zone. So that'd be really great to see, although right now we are seeing a little bit of a move to the downside. As long as we're still holding this nice consolidation to the downside, I'm not too worried, because what we'll take a look at a little bit later in the video is the broader market, looking at the kind of overall risk on sentiment that we're seeing. I do still think it's very positive, and we'll take a look at that a little bit later in the video. But to stick to Bitcoin, let's now move on to the 12-hour chart. We are getting another retest basically of this key level of support. Let's just take a look at a smaller time frame here. We can see it was, although it's not a massive monumental support, it was both a resistance turn to support, turn to resistance, turn to support. So we can see it was a zone of sensitivity, although the main zone I'm looking at right now is going to be the 50K, and then basically just above the 40K. So in 10 grand increments is kind of what we're looking at, is the 40K, 50K, 60K is important, but we see that major zone at 64. So as of right now, those are going to be the 3 major zones I'm looking at. And right now on the smaller time frame, we are looking like we're trying to get another test. If we are able to hold, that will be looking phenomenal, because this kind of reminds me of the sell-off that we had back in March. So if we zoom out, go back a little bit, we had the initial sell-off. So let's get our little bar. We had the initial sell-off, which was this one right here, and then we had another attempt for a breakdown, and that recovered very quickly. We see there was lots of buy pressure right here, with a big long wick coming all the way up and closing right here. Oops. So what we're looking for at this point is a attempt to break down, but we're holding a key level of support where buyers are stepping in and pushing up the price back up, where we're seeing a lot of buy pressure. Now that's exactly what we're looking for. Let's just take a zoom out and back to our original chart. We're seeing that second attempt pull back now, and what we're looking for is to see the buyers come in and push the price back up, not allowing for another sell-off, because the worst case scenario is if we see another rollover, and then if we start to see a lower low, that's going to be really detrimental to the overall crypto market. But if we do see it hold and we're able to make a higher low than the previous low here, or ideally even a higher low than the candle closure that we had at 47, 46K, that would be the best case scenario, because then we're making a low, a high, a low, and then we're going to be making a higher high. So, you know, Dow's law, we are just making nice higher highs and higher lows after the big dump to the downside, and that would be a great sign for a recovery in Bitcoin, because as of right now, it is looking not the best. But like I said, if we are able to see a hold here, it would be looking really phenomenal. And if we're taking a look at a larger time frame, we do see wicks to the downside. It would be a really nice thing to see a wick at around that 47K for an upcoming candle here on like the 12-hour or 2-day or daily. That would be the most ideal. So as of right now, it's looking a little bit bearish. A lot of altcoins are down. Like you see the main layer ones, not all of them are layer ones. I think Matic's in here, that's a layer 2. But overall, you see a lot of layer 1s here. Still correlated with Bitcoin. We'll take a look at the dominance first, but it's a little bit of a red day for BTC and the overall crypto market. It's not like we are very bearish. We're just taking another test to see if we're able to hold this 47 zone. And like we saw during the COVID crash in early 2020, recoveries do take time. We are going to see attempts from the bears to push the price back down. But as long as the bulls are able to hold that series of higher highs and higher lows, it's still going to be looking strong for that recovery because the broader markets are indicating that risk on is still the sentiment for the broader markets. So that's going to be the view of Bitcoin. We're then going to move on to the different market caps of both basically the entire crypto market, excluding just Bitcoin, which is what this chart is showing right now. You see slightly higher highs. We did have an initial push, and I thought it was going to be a nice retest right around here, where we saw a rejection, and you saw a slight poke out, and then you saw a pullback. We haven't really broke that low, so we're still forming higher highs and higher lows. There hasn't been a real impulsive push yet, which is kind of interesting to see that on the weekly chart, the low is still higher than the previous low. I guess on this chart it is the same because this low lines up with this low right here. So it is still holding higher highs and higher lows, which is really fantastic. And I'm talking about this low right here that it still hasn't gone below. This one right here. And on the 2-day chart, we can see we are still making higher highs and higher lows, which is good, with a small little pullback here to create our higher low. So this is the total 2. This is the entire cryptocurrency market, the cap excluding Bitcoin. And we see a nice expansion in volatility. And then we can draw the midpoint right here. Definitely not ready for a breakout yet. But we are seeing that recovery here. As long as we're able to not break below this descending support zone and we start recovering within this expanding wedge, it will be looking phenomenal. Like if we're able to get something like this, and then we're able to get a nice hold of a support zone, and then you're getting a wind up where you're getting 1 rejection, 2 rejection, 3 rejection, 4 rejection. Once you break that 4th rejection in zone of confluence, which would be this horizontal zone of resistance and then this descending zone of resistance. Once you see that break, it's going to be looking a lot more bullish for alts. And this chart right here is going to be for the total cryptocurrency market cap, excluding both Bitcoin and Ethereum. Ethereum has by far the 2nd largest market cap, and I believe Binance coin is currently 3rd. So this is counting everything excluding Bitcoin and Ethereum, like we can see right here, BTC and ETH. Very similar chart with the total 2, which is everything except Bitcoin. Exact same formation we can see right here. It did dip a little bit lower because it does make sense. The larger market cap tokens in coins are going to have, usually on average, less volatility because there's more liquidity to buy up the dip when it does plummet. So we are seeing a little bit more of a dip within the total 3, but overall the structure is very similar. If you're looking at it from the large time frame, you are seeing a very sort of similar structure where you're seeing a series of higher highs and higher lows, although the most recent high that we had isn't as significant as we thought, although right now we are basically basing at like that $700 billion mark for the total 3. So haven't really broken a major level of support yet. If we do break that $700-ish billion mark, that means we'd be creating a lower low, so we wouldn't be moving higher, which is not great. But as of right now, we're still holding. And on the 2-day chart, we see nice long wicks to the downside, and candle closures are closing much higher than the previous low, which is great to see. So nothing too worrying at this point right now when you're taking a look at the larger time frames. The smaller time frames are consolidating pretty nice. It would be great to see this $800 billion level hold, because then that would mean that we're slowly starting to trend back up, and once you see that break in confluence of the total 3, it'd be looking much better for the more speculative, smaller market cap alts. Alright, gonna get a drink of water. Moving on to the total DeFi list here. Similar sort of outlook. This is just for DeFi. You can see pretty well exactly similar. We're seeing a slightly higher high in the DeFi total market cap, but not a whole lot of change from the previous charts that we're looking at. This is a Bitcoin long, so this is the leverage longs on Bitfinex just for the bulls, and we do see it is slowing down a little bit. We had quite a big spike here from February 2021 up until July of 2021, and we are seeing a nice pullback, which I think is a good thing. You don't want too many leverage longs. If everyone is long, it's probably not going to move to the upside. Usually, we'd like to see not a lot of longs and a lot of shorts. That's when these parabolic pumps actually occur. So right now, we are getting a slight pullback in the leverage longs, which is a good thing. So people are able to kind of calm down, settle down before the next leg up when mania actually happens. But I don't think it'll be anytime in the super near future. I think it will take a little bit of time for the kind of wind up for the next major push to occur. And then for the shorts, we are seeing a pullback in shorts, which is really nice to see after the big pump in shorts. So there is supply reducing in the overall market, which is really great to see. It would be nice after a little bit more of a consolidation to see some more shorts add to their position. So then we potentially get a nice little short squeeze where shorts have to cover their positions by buying up Bitcoin at higher prices. But as of right now, shorts are reducing their position. They're not really putting on any more leverage. So we're seeing a little bit of a calm period in crypto. I don't think there's going to be a major pump here in the foreseeable near future, like I'm talking about like this week and maybe even next week. But as of right now, things are calm, and we're just waiting for that nice consolidation contraction before a reversal for Bitcoin. Because right now we're not really contracting, but we are in a descending channel. And if we are able to hold this 46K zone, that would be a nice contraction, because then we'd be contracting with the descending zone and a horizontal zone. We'd be looking for a nice contraction and volatility, a squeeze to occur. And once we get that next pump to the upside where you're going to be completing that bottoming formation, then it'd be looking good for the rest of the crypto market. And alongside that, it'd be great to see the shorts start to add to a position when we start contracting. So they have to get out of their position once it starts to pump, and that will add to the momentum. So that's going to be the overall market there. We're moving to the dominance. So this whole area here is going to be the dominance of whatever coin we're looking at. This one right here is just going to be the total DeFi dominance. It looks very similar to the market cap, which does make sense. For the total market cap dominance for the DeFi projects is only at 66.5%, which is kind of surprising, considering Ethereum's at 22% of the total cryptocurrency market cap. Bitcoin dominance is dropping, which is really good to see. We are at a major level of support at around, let's say, 40 to 39%. On a larger time frame, we can see this is just consolidating right now, but we are forming lower highs, which is really great to see, because sellers are pushing the price down each time it makes a lower high, or the dominance is weakening over time, meaning more people are putting capital in the more speculative altcoins. Ethereum, Solana, AVAX, Terra, all these coins are doing better than Bitcoin relatively. So that's really great to see. There is not that complete shift in risk off sentiment where people are taking money out of more speculative, smaller market cap tokens, putting them in Bitcoin or just stablecoin yield farming. So that's really great to see that people are keeping their funds in these liquidity pools or smart contracts or whatever people put them in crypto. Those are the main two ones: LPs, yield farming, staking, all that stuff. So looking good so far. If we do fall below that 39%, that's going to be a monumental point, because I think there will be a cascade event occurring. If Bitcoin is losing a lot of its dominance, it doesn't necessarily mean that altcoins are absolutely pumping. It could just mean that we are slowly moving to the downside for Bitcoin and alts are just remaining relatively still. That could also move this to the downside and increase the dominance for altcoins. So it doesn't necessarily mean that Bitcoin dominance moving down, guaranteed bullish push. It just means that altcoins are a pretty good place to be in. Ethereum is doing really well. Terra Luna is doing really well. AVAX is doing well. Solana is holding up their ground pretty well. So we'll take a look at that right now. The first one's going to be the Ethereum Dominance. It is at currently 22%. And when you're looking at it from a large time frame, it is just absolutely mooning right now, looking absolutely phenomenal. We did just break out of a nice symmetrical triangle. We were squeezing for a while. Once we broke that 20% range, we went from 20% to 22% for a multi-trillion-dollar market. That is a very significant amount. Like, it is 1.3 trillion without Bitcoin, and with Bitcoin, which is like just under $1 trillion, you're at like 2.3 or 2.2 trillion dollars. So to take 2% of that is a substantial amount, and we are seeing that momentum continue. It's not like Ethereum is doing phenomenal. Like, this is the price of Ethereum right now. It's not like it's absolutely mooning, but it is holding its value. Like, look at where Ethereum is relative to the previous all-time high at, let's say, 4860, and this is Bitcoin, way lower down compared to its previous all-time high of 69K. So that's the relative strength, indicating that buy pressure is coming into Ethereum more so than Bitcoin, and that is really great to see because Ethereum is a smaller market cap, although it is the most adopted by institutional investors and traders when you're looking at like ETFs and other financial instruments that institutional investors can use to gain exposure in Ethereum. So that's really great to see. But overall, we are seeing that speculation is continuing, and this is indicated by the the Ethereum Dominance moving to the upside. So Ethereum has been a better overall investment compared to BTC because it is relatively outperforming, and things are outperforming Ethereum, which is really great to see. BNB is one that a little bit more recently has broken out. Sort of a similar chart compared to Ethereum. Ethereum has some slightly higher lows. BNB had some basically just lows at like 2.8-ish%, but we did finally break to the upside here. This is a very nice structure that we saw some lower highs contracting against the key level of support at around 2.93%, and we did get a nice little wind-up structure to initially break out of this major structure that we've been in since March of 2021. So basically a lot of this year, we were just sitting within this consolidation of Ethereum against Bitcoin, against the overall cryptocurrency market. Ethereum Bitcoin does look similar to this chart, or sorry, Bitcoin against BNB looks similar to this chart. But right now we are seeing Binance Coin slowly move to the upside here. Not as aggressive as Ethereum. We're getting a little bit of grinding here where we're not getting impulsive, explosive pushes to the upside. But overall, we are seeing the dominance hold up on Binance Coin a lot better than Bitcoin. And the chart of Binance Coin, like we can see, this is the previous all-time high at like just under 700, right around here. And we're seeing the current price at 570, not as bad as Bitcoin on the downside, but Ethereum has been holding up better. And this is the BNB right here, looking pretty solid. And we'll take a look at the Bitcoin or Binance Coin price action a little bit later on. Sol has also been doing well. Sol currently has a 2.5% hold of the cryptocurrency market cap in terms of total dominance. When you're looking at it from a large time frame, Sol's just absolutely dominating. It went from sub 0.1%, basically 0.01% to 2.5% of the total cryptocurrency market cap in terms of total dominance, which is absolutely mind-boggling. When you're looking at it from the 2-day chart, we do see a slow grinding up. We are still forming higher lows, which is great, but we're really having troubles getting past the 3% mark. When you're looking at it from a smaller time frame on the 12-hour, you are still forming nice higher lows, and we're just consolidating, holding key levels of resistance, which is this guy right here. Let's just make that red. Let's see where my thing is right here. Perfect. So that's going to be the major level of resistance that's currently holding, and then we're getting a low form, and then we're getting a higher low. Let's just draw that again. We're getting a higher low right here, and then we're getting an even higher low right here. So the current level of support is around 2.4 to 2.9, and if we're taking a look at a smaller time frame here, we're just hovering in between here. It would be really great to see if we get a slight ascension increase. Like, for example, let's get my quick print screen out here, and a lot of market caps or a lot of Bitcoin dominance charts as well as other dominance charts are looking like a little bit of an ascending wedge. So like we're getting something like this where you get slightly higher highs, but you are getting more aggressive higher lows. And in this type of situation, there's a couple of options that could play out. Let's just change the color here to red so it's a little bit easier to see. And then we can make it a little bit bigger. So the first option is if we initially break to the downside and then we break to the upside. So that's basically the creation of the structure. And we'll be taking a look at two different ways that this could play out. The first one, inevitably, on the larger time frame, I think it is going to be moving to the upside. But the first option is if we go down a little bit, create a lower low from what we're currently holding. That will create a situation where we could be looking for a descending wedge, descending channel, and it's, I don't think, going to make it down all the way to the target. So like that would be the target right around there. I don't think it's going to make it all the way to that zone. If we do break to the downside, forming a lower low than this low right here, then we'll be looking for like somewhat of a structure kind of like that, where it's going to be slowly moving to the downside, and then we'll be getting that recovery maybe at that like 1.75 range, so we don't exactly know. So that's going to be option number one. If we do see a longer than ideal consolidation, I don't think we'll be just like turning back around and this will just be like a massive rounding into a bearish move. I don't think that's going to be happening. I think we'll be seeing a contraction if it does fall down below the current level of support. But the second option would be if we do see like a blow off kind of top event where you get the 2.8, 2.9K zone hold as a new level of support after initial bullish push. You get a pullback to validate that 3%, and then you get that next leg higher. That would be the more bullish case if we are going to be breaking this zone right here. But as of right now, we're just still consolidating. Nothing really to talk more about because we're just consolidating deeper and deeper into this contraction and volatility for the dominance, not just for Sol, but for a lot of different projects. So that's going to be my view on Sol. We can just remove everything off the chart there, move that back. So as of right now, we're just chilling. I think Sol is a really good investment when you're looking at layer ones, looking at alternative networks to invest in, because as of right now, a lot of people are fleeing Ethereum just because of the gas fees are just so damn expensive. Moving on to the next one here is going to be Polkadot. A little bit of an underperformer when you're looking at the dominance here. We've been seeing a lot of bearishness in terms of the dominance for Polkadot. I think the ecosystem is doing well. You see like a lot of projects, Polka City, the launchpad for Polkadot, all these things are doing relatively well, but when you're taking a look at the actual layer one there, not doing so well in terms of performance. Doesn't mean that it's going to be a bad investment or anything like that, but just when you're looking at the relative strength and weakness, DOT has been underperforming other layer ones. And that said, it is holding a nice level of support potentially for the series of higher lows that we're seeing. It is still unconfirmed. If we're taking a look at the potential first rejection right there, turn to support, turn to support, turn to support. So we see some level of support there. Although right now, that's going to be the zone of confluence that I'll be looking at there. So we'll see how it bounces. If you are looking, like if you're already bullish on the Polkadot network and the Polkadot ecosystem, and it's basically the projects that are built on top of it, might be a good opportunity kind of coming up here because there has been a key level of support hold at around that let's say 1% range for Polkadot in terms of its dominance against the overall cryptocurrency market cap. So that's going to be a good one to keep an eye on if you are already bullish on the DOT network. And when you're looking at the price action, let's take a look here. Not phenomenal for that $50 top. And this is going to be the major level of support that we're seeing right here, kind of around like $12, $15 range. And then you got the midpoint at around that $24 range. So we are kind of at that midpoint. Let's take a look at the 2-day chart. Lots of support around there, key level of resistance. And you can kind of see it's a zone. As you can see, it's not an exact price point. Initially, it was a key level of support, turned to resistance, is now turning to support again. So both the dominance for DOT as well as the price action for DOT are in zones of support. So if you already are bullish on Polkadot and if you are a big fan of its network, could be a decent time to be looking at potential entries here. Let's take a look at the 12-hour chart. Had a big dump to the downside here. Hasn't really broken any zones of confluence, so the confidence is not there, at least for a recovery just yet. And let's just go there, make this a little bit wider, and that's going to be our current structure. Let's get our midpoint there. And we can also draw a midpoint. Let's take it down a time frame so we're able to see candle closures. I would say right around there is going to be the zone of confluence. It's a little bit larger than I'd ideally like to see. Right around there. So once it breaks like above $33, I think that's going to be a point where we're going to be looking for a potential reversal in Polkadot. So if you are a lot more conservative, if you want the highest level of confirmation for this dip buy, I would say once it starts to break back above the $33 range, like if it starts to contract and buyers are able to hold the $24 range, and you're able to get above this key zone of supply, because right now we're contracting within the descending zone. You got the support at $25, and then you got the resistance at 33. So once it breaks above the 33 range, it's probably going to be the highest level of confirmation that we are going to be getting a reversal, and it could be a good opportunity to get a nice lower entry than just basically FOMOing in near all-time highs or at all-time highs. Never a good option to be breaking and buying into a breakout just into the all-time high, in my personal opinion. It's better to wait for a pullback. It's better to wait for consolidation where less people are buying. You don't want to be a sheep. You want to be able to understand what you're investing into and have enough conviction that if it does pull back, you're just thinking of it as a sale and you're not thinking of it as, oh shit, the market has turned, the project's not looking good anymore. As long as you have a pretty good understanding of the benefits of it for the long term, these pullbacks are somewhat like rewards. They're not really fear-based if you are investing in it. If you're trading, total situation, because traders have to be very nimble, very flexible, but if you're investing, these are really golden opportunities to add on to the position, kind of like we saw back there. Hopefully everyone took advantage of the massive dip buying opportunity that we had in summer, and I think this could be another dip buying opportunity for investors in many other projects in crypto. Not going to go through every single list here. Let's just take a quick look at Luna. That I'm not even going to look at because that's a disgusting move to the downside here. Let's keep that on auto. I don't even know what's happening with that move to the downside. I don't know what happened on May 17th, 2021. But if we are taking, kind of like removing that and taking a look at the overall trend, we are forming nice, stronger, higher highs and higher lows. If we're taking a look at a slightly more smaller time frame, not counting that massive crazy volatility event that happened, we were in a consolidation for a while. We did recently break out of that consolidation. We're forming a strong bullish higher high that had a very impulsive push for the dominance of Luna, indicating that Luna is appreciating at a much greater rate than the rest of the cryptocurrency market and the rest of the cryptocurrency projects, which is fantastic to see. A lot of developer activity on the Terra Luna network. Really cool opportunities to invest in. Kujira is a really cool one. Mirror Protocol is a really cool one. Anchor Protocol is a really cool one. Definitely check those out. Let's look at the Terra Luna price action here. Also, same thing. You do see something slowly grinding up, and then now you're seeing a nice consolidation right here. So you see a nice grind up. You see a nice squeeze occur. Not absolutely ideal. Maybe better if it was a slightly more contracting squeeze, but you do see that nice ascending zone. You get that nice break. We talked about this earlier, where you get an ascending zone, you got to break that zone of confluence, you got to pull back, validating the previous resistance to a new level of support. And that, in my opinion, is what we're really seeing right now in the price of Terra Luna. I'm very bullish on Terra Luna if we see a nice descending zone there. So what we're seeing right now, let's quickly draw this. Actually, let's go on a smaller time frame here, or a larger time frame, to look at it in a little bit more detail. Let's get our print screen. And what we're seeing right here is we already talked about an ascending wedge breakout to the upside. We're already seeing that. We already saw that initial break to the upside, like so. Where this is a pullback, where you're getting that previous resistance turning into a new level of support, and then you're just contracting. And that's really what we're looking for, because after every major contraction, you get a nice expansion in volatility. So this previous level of resistance right here, resistance, 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 is now turning into a level of support. You see this massive rejection by the bulls, pushing the price right back up from its dip back down. You see the previous level of resistance turning into a new level of support, contracting the price deeper into the symmetrical triangle, because you see the higher lows here, lower highs here, contracting into the apex of the symmetrical triangle. And I think it is inevitably going to start breaking out and continuing to the upside. I remember looking at both DOT and Terra Luna being at the same price. It was at like $30 or $27 or something. And I was like, okay, what do you think is going to hit $100 first? And obviously with DOT basically being half as much as Terra Luna, it's pretty unbelievable to see that discrepancy, where Terra Luna is seeing a tremendous amount of buy pressure and DOT is seeing a lot of hesitancy in the bulls coming back in after the big dump. So Terra Luna is very, very relatively strong compared to the rest of the cryptocurrency market, in my view. All right, so Matic is also doing well. Not going to talk about it too much here. Don't want to get the video to go too far over. Overall, looking very phenomenal. We were consolidating for quite some time. Once we broke that 0.5% range, we have been moving to the upside quite significantly. We are right at that previous level of a high at around 0.67%, turning into a new level of support. Let's quickly look at the Matic USD price. Basically right at that previous level of resistance here, and on a smaller time frame, we are holding this key level of resistance as a new level of support. So overall, it is looking pretty phenomenal for Matic. If you're already bullish on it, probably not a bad place to be entering, because you are at a low. You haven't really closed above this major level of resistance on the weekly, but you do see candle closures on the 2-day, on the daily. So that's really great to see. We had a little bit of a wind up here, which then broke the price to the upside. We can see that nice little squeeze right here, push up, pull back. So overall, it is looking very strong. Matic is definitely one to keep an eye out on. Atom, not looking phenomenal right now. You do see a pullback in the dominance, indicating that it's not appreciating at the same rate as like a Terra Luna or a Matic or a Sol. So seeing a little bit less capital flow into Atom or Cosmos. eGold or EGLD, Elrond, definitely not looking phenomenal. Algorand is just consolidating, nothing too crazy. Cardano just losing a tremendous amount of dominance, losing a lot of its market cap. We've been kind of shitting on Cardano a little bit, to be completely honest, but at the end of the day, everyone has their own favorite altcoins. Cardano doesn't really have too many projects being built on top of it compared to things like Solana or Terra Luna or Ethereum. So it's not an ecosystem that is, in my view, at least thriving as much compared to, like, even AVAX is doing phenomenally well. So if you are going to be picking a layer one that developers are building on top of, I don't think Cardano is going to be the best bet, but everyone has their own due diligence that they have to do. HBAR is definitely one that I've been keeping an eye on. I don't have any exposure, but it does look pretty bullish. If you're looking at it from a larger time frame, it's just making higher highs and higher lows, really looking strong. On a smaller time frame, it just consolidates and then it has a massive pump up. So if you are looking at potentially accumulating, you know, it's not a bad time right now because we're just in the consolidation. Right after a pump might not be the absolute best time. Let's quickly look at the value of HBAR. I believe I added in here. Maybe not. Let's just, oh, it's right there. Never mind. Yeah, we're seeing definitely a slight pullback here. If we are able to get it at like 16 cents, oh boy, that would be really nice to see because you're able to get it at a major low. For a smaller time frame, you do see a slight level of support at around like 25 cents. If you are looking at this zone right here, because it was a key level of support, turned resistance, probably going to be some level of support right now. But as of right now, we're just kind of consolidating against a key level of both resistance and support. I'd say the best opportunity, in my view, would be around that 16 cent range for a potential buy on a support zone. If we are able to hold that $25 zone, that would be really great to see, because then we'd be forming like a descending zone there. Maybe a zone of confluence would be around that 30 cent zone right around there. Get that trend line like so, and let's just open up so everyone can see. Get that zone kind of like so. So we are seeing a nice, well-respected descending zone. And if we are able to break that zone of confluence around that 30 cent zone, that'd be looking pretty good for the overall market for Hedera Hashgraph. But right now, it's just consolidating. Wouldn't be my top #1 pick just in terms of relative strength to go into. Not crazy anything for EGLD. Theta has just been consolidating. Nothing really more to talk about in the dominance aspect of it. Internet protocol or internet computer, nothing really crazy. Dominance has just been dropping since the chart for the dominance right here, as we can see. Theta hasn't been doing crazy. Near has been doing well. I haven't really looked too much into the Near protocol, but it is relatively doing very well compared to the rest of the cryptocurrency market cap, and it is finally pressing up and trying to push up out of this descending zone that we're seeing right here. It is forming on the larger time frame higher highs and higher lows, so that's really great to see. So Near protocol is something that I will want to be looking into in the near future, just because the technicals are looking like it's gaining overall dominance in the cryptocurrency market cap. Phantom doing all right when you're looking at it from a large time frame. It is moving up, but on a smaller time frame, it is consolidating. I would say like the 14% range could be looking like a pretty good opportunity, because you see way back in February 2021, key level of resistance turned to new level of support. Also a nice candle closure right at that 14-15%. So that'd be a really good opportunity if it does fall all the way back down below there. Clay and XRP, nothing crazy. XRP has been dropping in dominance quite a bit recently. Not going to be talking too much about the overall prices because we've been talking about the overall dominance. AVAX, like I said, a lot of projects built on top of it, looking very solid. And a lot of like own forks are actually on it as well. Time Wonderland's the most common, but you do see a lot more of like the DeFi DJ plays on AVAX, so that's pretty interesting. Luna is doing very well, kind of similar in terms of AVAX, in terms of the overall price, not dominance, but both are doing pretty darn well. DOT has been consolidating a little bit. CRO has been doing well. It is coming back and did make a higher high than the low that we made and the higher low, or the lower low that we made back in December. So that's really great to see. It'd be really nice to see a higher low form because the low that we had was in December 3rd at basically 48 cents. We had a higher low at 51 cents, and ideally if we're able to make a higher low at like 57 cents, then we're slowly able to crawl out of this nice fall here. And if we're looking at it from a 6-hour time frame here, always you get a little bit of a blow off top. I don't usually like to go from the very top. I like to go and assume that there's going to be a blow off top to finish off the big push, and then you see a nice recovery here. You get a resistance turn to support, and you get a nice candle closure right there. You get a wick, wick, wick. Not ideal, and I think that's going to be the way I'm going to actually put it right here, kind of like so. And put that there, and then we'll get our nice midpoint. And you're already trying to hold this current level of support. I don't know if it's able to. If it does test back down, wouldn't be too surprised if we do go back all the way down to this level of support at around like 52 cents. Like I said, it would be great to see higher lows form. So it'd be not great to see the price dump all the way back down to 50 cents. If it's able to hold like 54 cents, it would be really great to see, because then we're seeing a nice contraction like so. So then we'd be initially moving to the downside, we'd be contracting within the symmetrical triangle, and if we're able to break out of it above 60 cents, that'd be looking very good for CRO. It has been doing well. There's been a lot of bullish activity for, like, in terms of the fundamentals for CRO. They've been doing a lot of acquisitions. They've been buying up a lot of marketing space in terms of stadiums, in terms of partnerships. And I'd say CRO is one of the most common projects to see in terms of like mass marketing. They're really big into the sports scene. So I'd say with their cards just being so useful in terms of the cashback, in terms of like being able to pay off for Netflix, Spotify, you get Expedia discounted if you have, I believe, the $5,000 USD and higher. So like the pink and the purple card, I think, and the Obsidian's the final one, which is like for $500,400. I don't exactly know what it is, but really, really solid project overall, and I'm pretty bullish on it. And the staking is just the cherry on top in terms of being able to generate income while you're able to generate income spending money. So it's a pretty good situation overall. All right, so not much more that we're going to go on for the dominance chart here, as well as the layer 1 protocols, or most of the layer 1 protocols. DeFi we already looked at. Nothing really crazy in the DeFi space. Nothing's really pumping. You got like Ethereum projects that are just kind of consolidating. A lot of like the major ones like Aave, Comp, MakerDAO, they have been basically really stable since we saw the summer of 2021 push to the upside. So it's been pretty stable. Not a whole lot has happened. Like we can see, this is Aave, probably one of the largest ones on Ethereum. Don't know if it's the largest. Bancor is actually a really interesting one. This is BNT. If you're worried about impermanent loss from liquidity pools where you have two different assets staked, let's say if it's like a stable coin and a volatile asset like Aave, Bancor, Uni, anything, you could get subject to impermanent loss. Definitely check that out if you are interested in DeFi. Definitely something to consider if you are in putting your capital in DeFi protocols and smart contracts where you're able to generate a yield. But Bancor is able to basically pay you out for any impermanent loss that you are subject to. So you're basically removing the risk of impermanent loss when you're yield farming or generating yield through putting capital in liquidity pools. So that's a really innovative thing. And although I haven't put any money in it yet, it's definitely something I am taking a look at to just basically reduce a little bit of risk when you are yield farming, when you're looking at just keeping something in a liquidity pool for a very long time, like multi-cycle holds. That's a really good opportunity in my personal opinion. Not a whole lot more. Cake is a little bit disappointing. We were forming a nice wedge within this zone right here, but after it broke that $17 range and we were not able to break $20, it plummeted down to $14. I've been holding my auto syrup pool for a while, and it has been doing really well. Obviously, it's been paying me out phenomenally, but the actual underlying asset has been depreciating. I'm a longer-term holder because when you're looking at the kind of comparison versus Pancake swap versus all the other DEXs on the BSC, like Bakery Swap or Venus. Pancake Swap has by far the most in two different aspects: market cap as well as total value locked, the TVL. So when you're looking at, like, for example, Solana, there's all these different DEXs. You got Serum, you got Radium, you have all these different, you got Step, you have all these different projects that are taking a percentage of the total DEX TVL, total value locked, as well as the market cap for the DEXs on the Solana network or Ethereum network or whatever. But with Binance Smart Chain, Cake is by far the largest in terms of both TVL as well as market cap. So in my view, it's kind of a clear winner on the Binance Smart Chain, and Binance is also supporting Pancake Swap. So on the Binance Smart Chain, I would say Pancake Swap is the best investment. It has a really solid syrup pool you're able to stake, has no permanent loss, or impermanent loss, which is really nice to have. You just put your money in there, you stake it, you leave it, you chill, and it just generates income, which is really good. So really good project overall. A little bit of an underperformer, which is unfortunate. A lot of our community members on Discord are already in Cake, already have been staking it. So we're kind of taking a little bit of beating on Cake, but we do obviously have other investments that are doing a lot better in terms of relative strength. So unfortunate to see that it is going down. We are at a major level of support at around $10. We see this was the low that we saw the bulls hold in the summer of this year, 2021. So ideally, we are going to be seeing that continuation of the $10 range hold as support. This is Bakery Swap. Bakery Swap, even worse than the Pancake Swap there. Chess, not doing well. This is Venus, also not doing well. Actually holding up not terribly, to be honest. Alpaca Swap is also another one that is on the BSC that has not been doing well. And then you have things on the Solana network, starting with like Serum, Step, Radium, Oxygen, Tulip. All these ones are on the Solana network, and they have been doing relatively well compared to, let's say, things on the Binance Smart Chain. Serum, a little bit of an underperformer. We were looking at this nice squeeze that was occurring at around the $6 range. Once it broke down to like $4.80, I was looking at entering, or I did enter there, and it continued to move down, like right around this zone right here. Why is that? Key level of support around there, and then key level of resistance, key level of resistance. I thought it was going to be a nice hold around here. It is continuing to dump, unfortunately. Don't think it'd be going down all the way to 250, but honestly, it very well could. We had a massive rejection at that $12 range, and since then, we've been consolidating, slowly moving to the downside, and it's been a little bit of an underperformer, but it's basically the risk that you're taking on these more smaller speculative altcoins. Like, if you're looking at reducing risk, you're going to be looking at reducing the amount of upside that you're going to be having. It's the risk-reward skew of just more risk you have, the more reward that you're going to be able to generate, because these are a lot smaller in terms of market cap. There's less capital chasing them, which means on the upside, because it has a smaller market cap, it takes less capital to move up in terms of percentage. Like if there is going to be a $10 million buy order on Serum, that's going to move the price up a lot more than a $10 million order on Bitcoin. It's not really going to move the price up at all on Bitcoin just because it's so liquid and it's such a large market cap. So when you're looking at it like that, it's just something that you have to accept and expect when you are looking at investing in smaller market cap tokens like Serum as well as Step. So Step's obviously not doing too phenomenal. It's at 33 cents right now. Once it broke that around like that 63 cent key level of support, it was basically a very quick, swift move to the downside. Major next level of support is 17 cents with a midpoint at around 37 cents. If we're looking at like a slightly smaller time frame here, we see key level of support at around June of 2021 turn into resistance in the summer, August, July 2021. Could be a key level of support that we could be hitting. We still have a little bit of ways before we actually get there. So we could have one more dump to the downside to around that 25-26 cent range. Let's just take a quick look at the 12-hour chart here. We do see a nice series of lower highs, or lower lows, sorry. Kind of right there. Let's go right around there. Ideally, I like to see that hold, so I think that's going to have to be kind of around there. We'll get this candle, and you got the resistance right there. And then you got an expanding zone, kind of like so. So nothing crazy, and then you're going to get your midpoint right around here. So what we're looking for is quite a large reversal. The point where you're going to get a lot more confidence is quite far away. It's going to be around that 48-cent zone. So you could see a little bit of thrashing here for the markets, where you're going to get a low at around 25, 26 cents, which is going to be this key level of support. You got your resistance at around 50 cents. So you got a 25-cent range. We're going to be kind of fumbling around. I wouldn't be too quick to look to enter, because the end goal that we're looking to see here is initially you're getting a consolidation to the downside, which is what we're seeing right now. Ideally, you're wanting to see this descending zone get respected at least one more time. Look, if you're able to get a nice squeeze right here, a nice little move to the downside, respect one more time of this key level of support, and then you're getting a squeeze where then it's a move to the downside, and then you're getting this squeeze here where you're getting a key level of support hold and a descending level of resistance, squeeze the price closer to the apex, and then that is where the contraction is going to breed the new expansionary phase. So as of right now, definitely step would be something that I'd be hesitant to enter until there's a lot more confidence in the air. Yeah, definitely not looking the most phenomenal for all the different SOL networks there. It's going to get past these a little bit more, trying to move up a little bit. The Metaverse projects are looking still pretty good. Affinity is holding up relatively well, which is good. Sand's still doing really well. It's actually contracting right now. Really solid, because you see a nice level of support here, turn previous resistance to new level of support, and then you're just contracting within this zone right here. If we are able to get a nice zone of confluence break around that $6 range, we could see another move to the upside after it breaks $6. So that's definitely one to keep on top of. Is Sand has been doing obviously very well. The market cap is quite crazy compared to what it's able to provide in terms of the game and in terms of the users of the game, but market caps aren't directly tied to the value of the project itself, like directly correlated. Yes, it'll slowly revert back to its mean over a long period of time. It doesn't mean that it could shoot up 2, 3, 4x before it actually reverts back to the mean there. Mana recently had a massive pump, and since then it has been consolidating, not doing super well. ENJ, I'm very bullish on this. Holding right now, although not phenomenal. It actually still hasn't broken its previous all-time high yet, which is kind of surprising. Overall, nothing crazy to keep an eye on. Meta here is definitely one that we've been talking about within our Discord. We're talking about it when it was holding the 11-cent range, which is around this guy right here. 12 cent. Oh, it was around right here. I believe it was Miguel. I didn't exactly know, but we were talking about around the 11-cent range, talking about how it was holding, it was descending, breaking the zone of confluence right there, and we were talking about the 11-cent hold, and now it's at 22 cents. Unfortunately, did not get to enter in this really interesting project. It's basically like scanning everything in the real world and importing it into the digital world. We're getting very high graphic, very realistic looking graphics in the game, so it's a pretty speculative investment, but it's a pretty interesting project to say the least. Polkadot on the Polkadot network, pretty interesting, kind of like the GT of crypto. My neighbor Alice, don't know too much about that. And Blocktopia is pretty interesting. Massive sell-off that we had. UOS and all these other ones I don't really know too much about. And then you got the web services and data storage. You got Filecoin, you got Flux. I don't have a whole lot of exposure in like the web services and data storage, but it is something very useful. It's kind of basically competing against AWS, Amazon Web Services. Flux is actually doing pretty well. I saw an individual talk about Flux, got interested in it. Still haven't invested any money, but definitely I am going to a little bit later on. Once a really good opportunity comes, I'll definitely look at that one. And then some other related web services and data storage type information. Not really going to get into the other ones. QNT, I have been a holder for a while. Pretty unfortunate that we're seeing the $200 range break to the downside. We're just bleeding out at this point, but I do have a lot of faith and confidence in this project. Massive project for interoperability, so definitely going to continue to keep an eye on this. Not going to really add any more, but I already have my bag from, I believe it was like the $68 range was my first entry, right around this low here, and then it just absolutely pumped. I think it was initially the pump up, and then it pulled back and I bought some more, and it just absolutely skyrocketed. So decent decently up on that one, but at this point, I'm not really going to be putting any more in at this point. FTX doing really well. We saw Sam Bankman-Fried talk, I think yesterday it was. Very, very intellectual individual, very, very thought out. Obviously, the platform is doing very well. You can stake on it. A lot of the projects you can stake for 8%, which is a substantial amount compared to what you can get elsewhere. Just on the related of staking, Terra Luna's network on this Terra station, you could stake UST, the stablecoin for Terra Luna's network, for 20% APY, which is pretty unbelievable when you are looking at not even a liquidity pool, but it's staking. You don't have to worry, or you don't really have to worry about impermanent loss on stablecoins, but you don't really have to worry about much. You just stake, hold, chill, generate income, and if you have a substantial amount, you could basically make a living wage just staking crypto, which is pretty unbelievable, while beating inflation. Like inflation adjusted, you are still able to make a decent amount of money, which is pretty phenomenal. Not really going to talk too much more about the rest of the projects here. So now we're going to go into the SPX. I know it's a little bit long of a video, but please let me know, are you enjoying this type of just going through the list? Because that's basically what I do every single day. And I used to talk a little bit less about kind of random like dominance charts and stuff like that. I did the same thing for a while, but this is something a little bit different. I think this is able to provide a lot more broad of an overview when you're looking at more crypto, because we mainly looked at like the Bitcoin markets, and we mainly looked at Bitcoin dominance. We looked at total 2, total 3, Bitcoin caught data, hash rate, all that stuff. But as of right now, we're just trying to be a little bit more broad in how we view the market. So the S&P, obviously, big mover from the descending zone where we were talking about the new variant being scary. There was like Evergrande type situation kind of arising from it being on the back burner for a little while. The whole inflation is not transitory situation where the market was a little bit fearful, because if they're going to be raising interest rates, it's going to make it harder for businesses to borrow money, which makes it less it's basically reducing the growth for companies, because it's making it harder for them to borrow money. Also, you have to take that basically guaranteed return in the future away from the future's earnings, because right now you get $0 if you're going to be buying bonds or holding cash or anything that is a fixed income asset, because interest rates are so low. But let's say interest rates move to 1%. Well, that's basically a guaranteed return that you have to subtract from the future returns of more speculative investments, because you're able to basically make that as a risk-free return. So although they haven't raised interest rates just yet, they are talking about it. Jay Powell is getting a little bit more fearful of inflation. It will be interesting if actually something happens, like if there is a major threat to a second or a third, fourth variant, whatever we're one on right now. If it actually becomes something that's going to be negatively impacting the market, the central bank is going to stimulate the economy again. They're not going to let it fall. They're not going to let it get into a Great Depression. But it's a weird situation where they're in, because they say we don't want another Great Depression, we don't want another global financial crisis, we don't want massive risk on sentiment, but they also don't want a late 70s scenario. So they want it in this Goldilocks zone forever, which I don't think it's possible, because they are spiraling into that late 70s massive inflation type environment. Yes, velocity of the currency of the US dollar is moving to the downside, but if they're continuing to inflate the currency and proliferate the US dollar, it's only inevitable. And once that inflation train starts, it's really hard to crawl back. A little bit into the VIX. VIX is dropping from that $30 range resistance, which is phenomenal to see. It was a little bit worrying when it was consolidating right at that zone, but we were able to see a drop in the volatility for the S&P, which is signifying that there is major risk off sentiment, which is really good for crypto. So at the beginning of the video, we talked about how we were going to get into the broader markets and why, in my view, we are going to be seeing more risk on sentiment continue for the broader markets as well as crypto. So that's why I am thinking that we are going to be recovering a little bit quicker than most people think, is because I am looking at the broader markets, going to be looking at the S&P, the VIX, currencies, bonds, and that's what we're taking a look at right now. For the NASDAQ, we are basically right at that top right shoulder. So this is the head and shoulders right here. We did take a dump to the downside, but we're taking a look at the major time frames. It's basically just one big wick, so that's really great to see. And once we break that 16.5 16.3 zone for the NASDAQ, the NDX or NDQ if you're looking at the another index there, it is going to be basically a reversal rejection where this head and shoulders is now unconfirmed, it's invalidated, so we cannot use it. So that's going to be a pretty big blow to the bears and a pretty big accomplishment for the bulls after the big dive down sub 15.5k. So really looking phenomenal for the tech sector in stocks, which is really looking really good, and that's going to play into providing more buoyancy, I would say, for the crypto market because there's less fear in the market. And the Russell 2000, the small caps basically are holding that nice level of support after they immediately got rejected from the initial breakout of that high at 2300. Gold and silver just chilling, not really doing much, not really too much to go over for gold and silver there. The next thing is bond prices. Bond prices are moving to the downside, which is really good to see. We did create a new low for the SHI as well as the TLT isn't doing that phenomenal. But overall, we are seeing a nice move to the downside for the short-term bonds, which is really great to see. And this is the bond values as well. I think the 5-year, 10-year shows a little bit more clear. But the main thing I'm looking at for the bonds is SHI, which is the short-term bond values, and the 2-year, 3-year, 5-year bond yields. You can look at TIPS, which is a way to basically gain exposure to the inflation trade. If you think that inflation is going to go out of control, TIPS is going to be a really good thing to long. And we can see that the interest rates for the 2-year, 3-year, 5-year are increasing substantially. And when interest rates are increasing, it's a sign of inflation, and the shorter term bonds are going to be more volatile to market trends compared to longer term bonds. And you can see this very, very clearly within this section right here. This is the 30-year bonds. Look how from the initial pump, it's not really doing phenomenal. We're making slowly lower lows and lower highs. You get the 10-year, it's a lot more buoyant where you're getting a higher low. The high isn't as low compared to the 30-year, obviously, as you can see. Let's just make it a little bit bigger. So this is the 30-year, a lot more bearish, a lot less bearish, and the 5-year is looking a lot more bullish. Look at that high compared to this high. And the 3-year is even more bullish, and the 2-year just looking so phenomenal. So, you know, when you're looking at it from that perspective, it shows you that in the shorter time frame, things are looking better. Things are looking more risk on. There's not a major risk off sentiment. There's not fear, uncertainty, worry. People aren't diving into US bonds where normally when people dive into US bonds, it's when there's fear, uncertainty, and worry in the market. Like, look at pre-COVID 2020. Let's take a look right here. This is the bond yield. So this is the 3-year. This is the 3-year bond values. So let's look at 2020. Don't know why this is so crazy right now. There we go. So this is the initial run-up of the COVID crash where bond prices absolutely shot up because a lot of people were buying bonds, and at the same time the bond yields were dropping. Right? And now we're getting the opposite situation where bond values are dropping and bond yields are moving up, and this is a sign of risk on sentiment, risk on environment, and that's exactly what we're looking for. Also, if you know anything about yield curves, you can actually see the yield curve right here. So this is what we're talking about in terms of the yield curve. So the larger time frame, the longer duration bonds will have a higher rate than the shorter yields, which just makes sense. You're allowing them to borrow money for a longer period, so you're expecting a higher yield. But what happens when the yield curve inverts, or the yield curve inversion, what happens is the shorter time frame, so like the 3-month, 1-year, 2-year, is going to be higher than the longer yield or longer term bonds. So let's say the 1-year is at like 1% and the 3-year is at 0.8, and the 2-year is at like let's say 9. That would be an inversion of the yield curve, and that's a sign that in the shorter term, people are factoring in increased fear because they are basically buying bonds in the short term because the longer term bonds are yielding lower than the higher term bonds, or the shorter term bonds are. So basically, you want these numbers in a normal environment to be going lower in terms of the shorter amount of time frames, but if the shorter time frames are getting bigger than the longer time frames, it's going to be a yield curve inversion. Or yield inversion. There's also a really cool chart that you can check out on our Discord that shows this as well. To end it off, we will be talking about the currencies very shortly. We only have a little bit of time. I'm trying to make this under an hour. The DXY is going to be a main one that we're going to be looking at here. So taking a look at a smaller time frame, we are very, very aggressively moving to the upside after breaking 90 for, let's say, 50. Oops. Let's go back to the DXY here again. around 94.70. After that zone right there, got to hit that H. We have been moving to the upside. We are consolidating, squeezing, kind of forming a symmetrical triangle right here. So it does look like we are just basing out and squeezing, contracting for another leg up. So I think that the US dollar could be moving to the upside, which is not phenomenal. But that doesn't mean that risk-on assets and the US dollar can't be doing well at the same time. In the late 90s, we saw the equity market absolutely boom, as well as the dollar rise as well. So it's not like we can't have an environment where dollars rising and stocks and crypto are all rising. It's just going to be providing a little bit of a headwind for risk-on assets because what it's paired against is also rising. So that's going to be my view of the overall cryptocurrency market. If it does break out, we'd be looking for a little bit more strength in the dollar. But right now, we're still contracting within the symmetrical triangle. And as long as this is remaining stable, I don't think there's going to be a massive risk-on environment for the broader markets. So that's going to be my video. Hopefully you enjoyed it. If you thought that this was a little bit of a more comprehensive view of the overall market where you're looking kind of going one by one in the list, it's going to be a longer formatted video, but if you do find it useful, definitely let me know. If you find these videos informative, educational, enjoyable, it would mean a lot if we get a like, just so you're able to support our channel in some shape or way, and we know to continue to make more videos like this. Thank you very much for tuning in, everyone. Today is December 9th, 2021, and have yourself a wonderful rest of your day.